Hey everyone, Ben here and welcome to Motivation to Invest. Dividends, some investors, especially old school investors, love dividends. They love that passive income every quarter, and some people, if they're going into retirement, this makes complete sense, but other people just want that passive income in order to do the things they want to do in life. So the real simple question I'm going to answer in this video is dividend investing dead? Less companies actually pay dividends these days, so what is happening with dividends? Is dividend investing really dead, and what can we do about it as investors? Also, be sure to watch this video till the end, guys, and I'm going to reveal to you some high dividend paying stocks which are effectively gushing dividends, so you're not going to want to miss that. So before we get right into it, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on if you want more investing tips and deep dive stock analysis. And if you do find value in this video and you appreciate all the research which has gone into this video, then feel free to give this video a big thumbs up. That helps out tremendously with the channel. And if you guys actually do want to know in real time exactly which stocks I'm personally buying, selling, and access my entire investment portfolio, and join a thriving, exceptional community of some of the finest investors on the internet, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, let's dive in. So firstly, what are dividends? Well, dividends are actually corporate earnings of which the company actually passes on to its shareholders. Now, bear in mind, guys, these are earnings. So if a company is unprofitable, it's very unlikely that the company is paying dividends. In fact, it should not be paying dividends because that's really bad management. And now, although that seems like common sense, some companies, even if they're losing money that year or that quarter, actually still pay out dividends. And these are the ones we need to be aware of, and I'm going to get into that a little bit more later in this video. So paying dividends actually sends a message to shareholders like yourself about the company's future prospects and performance. If a mature company is paying out lots of dividends, basically that mature company is saying to its shareholders, we have very stable cash flow, we have very stable earnings, and we don't have that many opportunities to invest. We're making so much money, but we don't have the amount of good investing opportunities. So we're going to do the right thing and we're going to return that money to you guys as shareholders.
$100 billion.
Oh, gentlemen, silence.
And that's all well and good, but this also explains why many growth firms don't actually pay out dividends, because their earnings are like this, or they may even have negative earnings. So effectively, they shouldn't be paying out any dividends at all. And we've seen an abundance of growth stocks in the past few years, and these have become immensely popular. Just look at Facebook. Facebook pays 0 dividends. Google pays 0 dividends. Apple and Microsoft have started to pay dividends, but only very recently. So what do the current statistics say about the state of dividends right now for you, investors? Well, we're going to dive into this research report by a professor of finance at New York University. So here we go. So dividends tend to follow earnings, of course. Here we can see the earnings are in green. And if a company is making more money, making more profits, then they tend to actually pay more dividends over time if they're a company which already pays dividends. However, this is something I want to bring to your attention if you're interested in dividends. So this is the payout ratio. This is the black line here. And we can see the payout ratio back in the 1960s used to be close to 60%. So companies were paying out 60% of their earnings to you investors. And since then, it's been declining massively. And there's been a few spikes, of course, but over time it has declined. Now it's approximately 36% on average, the amount of payout ratio which a company pays out. So they're only paying out 35% of their cash in dividends. Now, there are a few reasons for this. It's not just they're being selfish and want to keep all that cash for themselves. There are a few important reasons for this. So firstly, more US firms are actually buying back stock rather than paying dividends. And if a company buys back stock, this is effectively the same as dividends because they're still returning that money to shareholders, but they're doing it in a much more tax efficient way and also a much more flexible way, which I'm going to get into a little bit more later in this video. We can see buybacks as this box here with the red around it, and we can see that's been increasing over time between 1988 and 2019 in the S&P 500. Now, even this really bad quality chart here, you guys can actually see that in different parts of the world, there's different payout ratios. So if we check out Australia and New Zealand, we can see they have really high payout ratios still of over 70%. And this is because of a few key reasons. So in Australia and New Zealand, they have a lot of natural resource companies, a lot of mining companies, and these effectively pay out a lot more dividends. So why do we see some companies which pay dividends just continue to pay dividends and keep increasing the dividends they pay, even if the business is doing poorly? Examples of this could be oil companies, telecom giants, and many, many more. Well, the reason for this is dividends are extremely sticky, and many of these companies, it may sound crazy, actually just copy all their competitors in the industry. So if everybody else is doing it, they basically do the Me Too logic, and they say, okay, everybody else is continuing to pay dividends, we best continue to pay dividends. So these people that really love dividends, this investing class that really love dividends, they're basically like dividend addicts, so they need their fix of dividends. And if a company decides to actually cut their dividends, even for sensible corporate finance reasons, then we can see the stock take a major plummet. Now, this actually makes sense if you're a shareholder. If you've invested into a specific company because of the company's dividends, then the company cuts its dividend, then of course you may wish to sell. However, you need to look a little bit deeper if you really want to be an exceptional dividend investor. You need to look at the reason why this company is cutting its dividend. Is it cutting its dividend in order to invest in a stupid project of which the management most likely won't make any money on and any return for you as an investor?
Gentlemen, I have a plan. Just do what we always do, hijack some nuclear weapons and hold the world hostage.
Or is the company actually cutting its dividend to be conservative? Let's say there's a global crisis. For example, during the 2020 global pandemic, many companies actually cut their dividends, such as Shell, the oil giant. Now, I personally, I'm looking at it from the outside. I wasn't already an investor into Shell, but I actually saw this as quite a conservative thing to do, given the uncertainty in the environment and the fact that oil prices actually went negative. But many investors were still up in arms and decided to sell off the stock massively due to this very reason. I personally invested, and then I waited for the rebound. I got about 80% return on that, and then I sold out. So it's clear to see that there's a lot of madness in the market, and the dividend clientele, the people that love dividends, can react very strongly to dividend cuts.
I will run this branch, or I will destroy this branch.
Now, some companies actually go into denial and actually continue to pay dividends even if the company is not making as much money as they should be making. Now, what they actually do is they actually take on debt in order to pay their shareholders dividends. Now, this is okay in the short term, but in the long term, this can have disastrous results, because in the end, the chickens come home to roost. The company will have to cut its dividends, and then when it does, the company's also got a mountain of debt to deal with. So we need to be aware of those type of companies, because if the company's paying out 70% earnings and it's actually increasing its debt to do that, then to me, that's a red flag, and those are not the type of investments I would personally invest into. And the professor of finance at New York University puts this in a really sort of great way, and I think this is exceptional. He basically says buybacks are just like hooking up. Let's say instead of having a serious relationship, you just have a one-night stand. And dividends are like marriages. Like, once you start paying dividends as a company, you're basically stuck paying dividends no matter if it's good times or bad times. And that could be really dangerous for both the company and investors such as you guys.
Are you asking me for a divorce?
Yay! 2 Christmases!
So what are the alternatives? What if you do want that passive income? Well, an alternative would be to invest into exceptional companies and just sell a portion of your stocks each and every year in order to live off that portion of your portfolio. But basically, you need to have a large enough portfolio, and you basically need to calculate it so you can actually live off a portion of it without actually diluting your portfolio down. So that is one method.
It goes back to what my mother taught me. Spend the interest, never the principal.
There are also still some great investing opportunities out there. I personally love REITs, real estate investment trusts. So these are businesses which basically buy a heap load of property. This could be commercial real estate. It could be big warehouses, which Amazon rents off you with retail clients. And basically they pay out the rents which they get from these large commercial buildings to you guys as dividends. So this is Seritage Growth Properties. Now, this is a commercial real estate company, and I know what you guys are going to say straight away. Commercial real estate, isn't commercial real estate dead? Isn't everyone going to be working from home in the future? Well, Manish Prabrai, who's one of the greatest value investors of all time, actually thinks not, and he was actually buying back heavy, and the stock effectively fell off a cliff when the pandemic hit by 82%, guys, which is crazy. The market effectively baked in that commercial property is not going to be used very much, so 82% decline is massive. Manish Prabrai was buying shares here, one of the greatest value investors. The stock has been steadily increasing over time, so he's up 121%. However, it's still down massively from its high, so to me this still could be a potential opportunity. The company pays a dividend yield of 5.63%, and I do see this sustainable in the long term. So this is a REIT, a real estate investment trust. I think commercial real estate will be hit, but maybe not as bad as people actually think it will be hit. And this video is not financial advice, guys. And here's another stock I'm going to reveal to you guys. This one is another REIT. So this is Iron Mountain, ticker symbol IRM. Iron Mountain is a unique document storage company that has been structured as a real estate investment trust. This means that it must deliver 90% of its income back to shareholders in the form of big dividends. Now that's a legal requirement for REITs, which makes them really special. IRM claims a 98% retention rate of its clients, and internal estimates show around half of its items have been stored for 15 years or more. That makes it tremendously stable and reliable. On top of that, it's recently moved into the digital age with information management and security offerings. Now, the current dividend yield for this stable company is 9%. So this is a great REIT also to potentially invest into if you're interested in those high dividends. WMB, so this is a pipeline operator, and they offer a relatively stable energy investment with a robust dividend. So the company generates consistent cash flow thanks to the highly regulated nature of its rate structure and long-term contracts, meaning there's a degree of reliability to the business model, even when other energy firms have faced serious uncertainty in 2020. Now, I did actually invest into a couple of these similar companies in early 2020. So the current dividend yield for this company is a massive 7.4%. So you're basically investing into these giant pipelines because they're getting that stable income from their pipelines, very similar to a toll road. So is dividend investing dead? Well, to me, dividend investing isn't dead. It's just changed its costume. So really, a lot of companies which used to pay dividends now actually do buybacks instead in order to be more flexible. And many companies, if you do actually want those dividends, I will personally look at midstream oil companies and REITs, real estate investment trust, because to me, they offer the most stable dividends. But what are your thoughts on dividend stocks? Do you have any dividend stocks in your portfolio? Comment your thoughts below. Also, if you did find value in this video, feel free to give it a big thumbs up. That helps out tremendously with the channel. And if you guys haven't subscribed yet, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you guys do want to know in real time exactly which stocks I'm personally buying, selling, and access my entire stock portfolio, the stocks and the story of how I grew my portfolio from $20,000 to over $250,000, and you also get to join a thriving community of some of the finest investors on the internet, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, thank you guys so much for watching. I hope you guys have an incredible day, and I'll see you in my next video. Invest safe.